Welcome to GP Bullhound's Tech Thoughts. Today is the 11th of June, and we are here with Inge Heydorn and Johan Roslund for our weekly market roundup. Today, they will be covering this week's tech market and are joined by Alon Kuperman from GP Bullhound's VC funds to share his insights from the venture capital arena. Over to them.
Yes, if we start with the market, it's been a really calm market this week. You haven't seen a movement over 0.5% for any single day. So it's really calm before CPI numbers coming out today. We're recording this on Thursday, one day early this week. So the CPI numbers are coming out today, and that's going to be really a highlight and really be say a check for everybody about the inflation and the inflation worries that are in the marketplace. But as the 10-year yield is down below 1.5 for the moment. We're waiting and seeing what the CPI will tell us, and then they have Fed next week. Short on the tech side, what's happened this week, it's been a lot of conferences, so we've been listening into them and listening to what companies are saying. We saw one positive upgrade from Seagate, driven by Shia, roll out the Bitcoin new version in China, really increasing the demand for hard disk drives. And on top of that, we have seen all the Taiwanese suppliers coming with numbers. The only one we're missing really is TSMC, which is reporting tonight, but otherwise across the board as expected. So strength across the board, excluding some of the smartphones vendors which are struggling a little bit due to the weakness we've seen in India and China. So that's really the market update.
Interesting. And today we will not only cover the public market, but also the private market. So we have invited Alon here from our private funds, our VC funds. And I think it's really interesting. You have also worked on the Titans of Tech report. Alon, what do you see in the VC ecosystem in Europe?
Hey guys, the Titans Tech report is quite exciting. We're about to launch it, but why don't I share with you some snippets from the report? And as you probably know, the market has been extremely buoyant, especially in Europe. So just to share a few facts with you guys, in 2020 in Europe alone, there's been $24 billion in funding. That is 6 times the amount in 2010. And also the rate of growth has been 50% more than the US. So Europe is really catching up and it's really active at the moment. In the last 12 months, Europe has created 52 unicorns, and they are valued at $94 billion on aggregate. This is 4 times the amount 4 years ago. And also worth mentioning that there are 18 decacorns created in Europe, which is a company that is over 10 billion, something that several years ago was highly aspirational. Also, the rate of growth for some of these companies has been really astonishing. So companies that, if previously companies like Klarna and Spotify took 10 and 5 years respectively to get to unicorn status, in Europe you're seeing companies like Hopin and Gorillas now that are becoming unicorn in 1 year. So that is pretty remarkable.
Wow, that's impressive.
Can I ask you, Alon, because that's interesting for us in the public market also, because remembering 2000, a lot of companies had no sales and they were worth a lot of money. But isn't it different this time? It feels like the one companies you are talking about, they have sales growth, they have a product, they are selling things, and so it's a different ball game this time around.
Yeah, I think to some extent it's a different ball game, but to another extent there could be sort of areas of caution. So yeah, there are sales, but what you're seeing is that companies are valued at the run rate revenue that they're currently at, or the revenue that they're expecting at the end of the year, and that almost does not take into account historicals or deep dive into the projections. So despite the fact that there are sound financials and revenues, unlike maybe 2000, there is a lot of emphasis of their growth in the very short term.
Perfect. Sorry, Johan, go ahead.
No, I was interested in the valuation there because you say that it's so much, it's 10x the amount of funding compared to 2010. What has happened to the valuation there? Can you see, is it the same as on the public market that the multiples are going up?
Yeah, I would say there's definitely been re-rating in valuation. I would say kind of anecdotally, a high quality SaaS company 3 years ago, the benchmark was, 10, 15 times ARR. What you're seeing today, it's more like 20 to 25 times ARR for a high growth company with contracted revenue. So it's around double, a little bit more than that. I think one of the things that is driving it is really that some companies are very well funded and they don't really need the capital because growth rounds are happening faster and faster. You see an increase in the velocity. Another factor is the abundance of capital, and you have very large funds that are in need to deploy, as well as SPACs. And I think this is what's driving valuations across the board.
How is the valuation if you compare different sector in the private side? Because if you look at the public side, you have the old school companies like Facebook, which is now old school. They are trading at quite nice multiples, Facebook, Microsoft, and so on. Then you have the new school, the snowflakes and all of those in the world, which trades at very, very high multiples. Can you see the same thing on the PE side?
Yeah, I think the multiple re-rating for high growth companies is sort of it's a tide that floats all boats, and of course within different subsectors there are various metrics that people focus on. So if it's with SaaS companies, the focus area is on the ARR. If it's with payments companies, it's the net revenue. And also people look a lot at gross profit. And of course, with marketplaces, it's about the take rate and the net revenues. So there are different metrics, but overall, you see people are mainly basing multiples at the moment on revenue and gross profit. Maybe it's worth kind of also sharing that, in our view, in our fund, we see a lot of deal flow across the board globally, as we have 9 offices and really leverage on the entire infrastructure of GP Bullhound. So we're able to compare, and we're seeing this shift in the valuations. For us, the most important thing is to stay disciplined and really not swing at any ball. So we're very selective in the investments that we undertake. It does not mean that we're not willing to pay up for high quality companies, as we know that some of the trends are still very much there and they're sound. So companies that are really disrupting a very large market, have strong network effects, competitive advantage, and a pretty sustainable moat, those companies are not going to go away. And often they also have monopolistic attributes on a global scale. So for us, investing in those companies, it's still highly attractive, even if we need to pay a higher multiple to say what we would pay 2 years ago, or just at kind of in early March when there was a lot of uncertainty. But the way we look at it is, from that point onwards, do we see a credible and realistic path to really do 3 to 5 times our money on a conservative base case, with backing and support to each of the value drivers, as well as a path to 10x plus if you are applying kind of slightly more optimistic assumptions. So that means that the bar is higher on making investments. But still, when we see some of those unique assets and companies that are very rare, we will invest in those companies.
And finally, we get a lot of questions from investors, which areas we think are most interesting to invest in. Do you have any favorite areas right now that you think is maybe not the cheapest one, but the ones that you really interest you to invest in?
Yeah, I mean, I think our fund is extremely thematic, and the areas that we look at are, on the one hand, definitely influenced by what's happening in the world around us. On the other hand, some of the themes are extremely long-term. So in terms of themes that we've been looking at for a long time now, include the gaming infrastructure, the music industry, enterprise collaboration and efficiencies within kind of the office environment, and consumer apps. We've been pretty successful in the past with investments like Spotify and Slack and Unity within those sectors. Other companies and themes that we have are more laser focused at the moment are things like, for example, internet privacy. That has, for example, got a lot of tailwind in the last, I would say, 6 months or so. Really started at the end of last year. And for us, this trend is becoming stronger and stronger. So we did make an investment around a year ago in DuckDuckGo, but we are very keen to look for more opportunities and also increase our position in some of the top performing companies.
Great. And how do we find this report? Is it on the Bullhound website?
So this report should be published soon enough, stay tuned for our research page for announcements and the Viva Tech conference that will be in Paris next week, that we published the report in cooperation with them.
Great. I know Inge has a lot of more questions, so I think we have to invite you to another program. This was really interesting, Alon. Thank you so much for joining.
Likewise, guys. Thank you so much.